Alrighty, good morning, good morning, good morning. How's everyone doing? Can you hear me all right? Let's just double check everything's set up. You know the drill. I hope you're all well. Let's go ahead and show my big face on your screen. G'day, good morning. Welcome to the live trading room. How we doing? I'm bringing some energy today. We're going to bring some energy. It's what we like to see. How's everyone doing? Are we doing well? Give me a thumbs up, give me a wave, give me something to let me know you're there and you're alive and that you can see me. And double check that everything's working. There we go. Hi, Jordan. Bernard. Good to see you, Bernard. Just wondering if you could share your thoughts on the fading technique with guidelines, tips, etc., what not to do, and so on. Absolutely will, Bernard. I thank you for your email there. We'll have a little bit of discussion once we get up and running. Hi, Jan. Good to see you. Welcome. Thanks for the thumbs up. Hello. I hope you're well. We'll give it a little bit of time. We'll let some people flood in, and then we'll start diving into some content. We're getting a dab from Stephen. How you going, Stephen? Yeah, I appreciate your email there, Bernard. We'll dive in and I'll ask you a couple questions about what's your ambition and what you're actually trying to do. And I think that might help a lot of people understand maybe who have gone down that same route as well. Obviously, fading isn't something that's easy to do. So we'll dive into that. You have to pick the right times, the right markets, and understand them on a deeper level. While it is fun when you pick the right fade, it isn't an easy job, and it can go terribly wrong if you're not pristine in your risk management when doing that. So we'll dive into that in a little bit. Mayowa, good to see you. Welcome. Am I saying that right, Mayowa? Shy introvert. You're a shy introvert? That's not a worry. No problem at all. I always love the whole introvert extrovert. I go between the two. So I'm extroverted in the way that I have confidence and I can speak, right? The way that I stand in front of you guys today and I speak. But I'm introverted in the way that it zaps all of my energy. So I can go out to a party, I can go out to an event, and I can be chatty and I can introduce myself, I can meet a whole lot of people, but then I need like 2 days to recover from that. So I bounce between introvert and extrovert. I think extroverts really gain energy from social interaction. Introverts lose energy from social interaction. I'm extroverted in the way that I can speak, present myself, and talk, but introverted in the way that it takes all of my energy. So don't worry, not a worry at all. There is room for everyone here, whether you're introverted, whether you're extroverted, whether you're confident, whether you're unconfident, whether you're new to trading, whether you're an experienced professional. It doesn't matter. We're going to address everything anyway in these live trading rooms. Okay. Exactly, you're an introvert. I think most people are. I think majority of people, especially, I think a lot of people, social anxiety became a huge thing over COVID, but we're going to chat about trading today. We're not going to dive into emotion, and we're not therapists. Let's say that. So we'll dive into that a little bit later. In terms of trading, I won't actually be taking any trades today. A couple of reasons for that. No, it's not a matter of confidence. No, it's not a matter of conviction. The reason I'm not going to be taking any trades today is because on majority of the pairs I like to trade in the morning Asian sessions, we do actually have a bit of news, right? So we've got Jackson Hole going on at the moment. The New Zealand dollar, the RBNZ just come out and spoke about a couple different things on what they want to address and how the US dollar's overwhelming strength at the moment is actually causing a bit of an issue for the New Zealand dollar. And that's going to be interesting to see how that plays out on New Zealand dollar, US dollar this morning as people warm up to the fact. As you can see, we're already moving towards the downside, which it's kind of expected given that news. We haven't moved far. We moved about 10 pips. But I can potentially see that moving to the downside for the rest of the day. Realistically, if I was day trading this, I would be looking for some short entries throughout that day as people come to terms with the fact that the overwhelming strength in the US dollar does actually create really bad conditions for trade partners, as trade partners like New Zealand, not like Australia, like Indonesia, wherever it is, we'll start looking elsewhere as actually buying stuff from the US becomes too expensive because the currency is very strong. So keep an eye on that. I think New Zealand US dollar will probably move towards the downside. Fundamentally, the odds are in our favor to move towards the downside, but we'll see how that unfolds throughout the day. And then we also had some Japanese CPI coming out at around 9:30, which is in about 20 minutes. I usually like to trade the Japanese yen pairs in the early morning to fade the volatility, but given that we do have some news and Jackson Hole is on at the moment, I think we're going to actually see some increased volatility, which means it's a market that I don't want to fade. So that's the reason I'm not trading today. Solely the trade checklist we always speak about. If you run through your trade checklist, my boxes aren't checked. So I'm going to be risk off. There's a bit too much volatility in the market for my liking when I'm trying to fade it. So today will be the type of day where you can trade breakouts. You could probably get some continuation moves based off of the indices in relating into the currencies. But as a whole, fading is not something I'm confident in today. Crypto AF 123, welcome. It's good to see you, mate. I hope you're well. Yeah, so I hope that makes sense. I hope that clearly defines why I'm risk off today. And it makes sense. We are just experiencing a little bit of volatility. For the regulars in my live trading room, you know I like to fade the volatility in the morning. Fade moves which shouldn't be happening. But today I think moves are going to be happening regardless. So I think the best kind of play you can be doing today is trading off of the relation with indices. But I wouldn't recommend doing that until they're all open and really moving anyway, which probably won't get for another hour and a half prior to that happening. So we're going to be a little bit slow in terms of actual market action today, but we're going to have a chat and I'm going to open up the floor for anyone who has any questions. Bernard, I know you want to run through fading techniques and different tips and tricks when fading. Quite a difficult skill, but I understand your attraction to it as I get attracted to it too. But we'll run through a couple different things and answer your questions. So at any point during this live stream, if anyone has any questions they want to ask, literally just do so. And I'm going to be addressing anything. If you want to analyze a pair, a stock, a crypto, today is the day. Today's the day. We're going to be wide open and having a look. But in terms of opportunity, trading the Japanese yen, let's wait for the CPI data to react. We're expecting 0.2% growth on top of what we got last week. I don't have any predetermined expectations for that. If that's what they're forecasting, honestly, I'm happy to stick with what they're forecasting. But realistically, in looking at trades, let's have a look at the Oz 200, the S&P 500, and the Nikkei index. If the Nikkei index starts running up or down with a bit of conviction, I think it'll be a good sign to actually replicate that move in the US dollar Japanese yen early morning, because we are going to get a bit of extra volatility with Jackson Hole going on and with the CPI data coming out. There is going to be a bit of volume. There are going to be people watching the charts. So if the Nikkei starts running, I do think we'll actually also see similar movements in the US dollar Japanese yen, and we may be able to catch some profits that way. Hi, Joel. Hi, Joel. It's good to see you, mate. How have you been? How's your trading week been? So before we dive into anything, the floor is open. Does anyone want to ask any questions or talk about any assets? Did you have any trades this week? How did your trading week go? Talk to me. Use me as your performance coach right now over the next 45 minutes. You have me. I'm here. Pick my brain. Go wild. Go wild. That's what we're going to be doing today. That's what we're going to be doing. I'll keep an eye on the charts and I'll talk you through what I'm seeing and what I want to see. But I am not trading today because I am expecting extra volatility in the early morning. I have also had a pretty strong coffee this morning, so my energy's up and about. A bit more energetic than what I usually am, but I like it. Not too bad. That's good to hear, Joel. I'm glad. I'm glad. So Bernard emailed me overnight, and we were chatting early this morning, and Bernard wanted to know. He's really interested in the way I faded the market. Okay, when he joins these live trading rooms and he's watched me live fading the market, and it took interest to him, and he wants to start learning the fade. And he asked for some tips, some guidelines, the technique, what not to do, what to do, and really how to manage fading positions. And the issue is when you're fading a market, it can be very difficult, right? Because there's a million opportunities you can see and be like, yes, this is a fade opportunity. When you've got that bias that you want to fade it because your strategy wants to fade it, right? So you might see a big move like this here. And you'd be looking at that and be like, we're in the Asian session. It's just ran like green, 13 pips. This could be a good fading opportunity here. When in reality, there's actually something pushing that. And it's about understanding whether the move is validated or whether it's just an odd move, which is perfect fade. So you're going to need a clear understanding of what's going on in that day. What happened in the stock markets the day before? We've had a nice bullish move. We're getting a bit of a bullish move come into the pre-market in the Nikkei. And then you've also got to understand what news is going on. Now, Jackson Hole is a very volatile time in the market in terms of reactive. So you will see, it's an interesting, you will see volatility drop and volume drop of people trading, because they don't want to be in the market while Jackson Hole's happening. However, when something gets released from Jackson Hole, they all jump back in the market. So it's a very reactive time. So while you may see, yesterday, the day before, especially in the US markets, maybe a drop of volatility and the moves that we usually get, it's because people are being very reactive towards the Jackson Hole, and they want to see what comes out of there before they invest any of their money in the market, which is perfectly fine. Now, the issue with that is it's a very unpredictable time during this, because at any moment someone could come out and say something crazy, and it can just drop or send it. There's no way of knowing. That they could just there is set press releases, but these big meetings, anything can happen. So there is a lot of, I want to say, anxiety in the market early on, where everyone's kind of sitting back being like, I'm just going to wait to see some kind of conviction before we move. Now, the issue with that is how validated are the moves we're seeing in price action. Hi, Tinnis, how you going? How validated are the moves we're seeing in price action? We're getting a nice bull run here in the US dollar, Japanese yen. Is this a validated move where it is actually indicating that we're going to go to the top side today? Or is this a perfect fading opportunity? And that's where fading gets a little complicated. You need some kind of understanding of what's going on in the market. And then on top of that, you need to ask yourself why you're fading. So Bernard, when you get into an area, I like to fade a market where there's no news due and there's not much going on. See, yesterday, Jackson Hole going on, the Japanese yen, you can see if we had faded here, here, and here, like, it just would not have been good. This thing just kept going and going and going. So it would not have been a good fading market. Whereas here, early on, if we got this move down or even this move up the top, break over the top, that was a perfect fading opportunity. What was the difference between those two moves? And this is where you got to kind of ask yourself, where's the volume in these moves? Is there volatility in the market? Just off naked eye charting, you can see these bull candles, they came quite regular. And then any candle that was showing at least a bit of bullish move, they were wicked. They were wicked, which was showing us that there was a lot of selling pressure in this area. Whereas if you look the day before at the buying power, yeah, we got a couple greens, but then we had a big red and then a bit more greens, and then the red pulled back to another 50% level. That was down to the 78.2 level. It's not really convicting the upside. And then we break above here, we see great fading opportunities. You can see that the move doesn't have much conviction. A move like this, you wouldn't want to fade at all, because you can see that it's got power in that move. There is validity behind that move. There's no point fading that. I'm going to get a little bit confusing here, and I know that just because I'm talking off the top of my head, like I haven't pre-prepared any material. I'm just telling you how I look at it. Fading is difficult compared to a lot of other systems because it's really determined on a basis of not set strategy rules, but a general feel for the market of what's going on, what pairs should you be fading, and then actually understanding that pair on a deeper level. I know that we average around a 40 pip move in the US dollar Japanese yen prior to about 11 o'clock, right? We get about 40 pips on average. And as you can see, that one moved perfectly 40 pips. So as we were hitting the top of the average, we broke the high and there's no conviction in the move. And it turns out that's a great fading opportunity. Whereas here, by the time we hit 11, which is here, we would have only moved 30 pips. There's nothing too hot there and there's conviction in the move. Let's go the day before. If we moved up to the top, 27 pips, we're breaking above the high here. Probably wouldn't have shorted that. If I had shorted that, it would have been a low risk. But you can see there's a fair bit of conviction there. Then we had a little bit of a steady and then a big candle pushing to the upside. And then I wouldn't be surprised if this is news related here at 10:35 on the 23rd. Let's have a look. Okay, yeah, a bit of, no, that's nowhere near the time. Oh, 10:30. Okay, we had the manufacturing PMI, which actually hit forecast. So I'm surprised that moved the market so much. But yeah, so tips and tricks when it comes into a fading market, it's tough. It's tough because it's all based on knowledge and feel. So right now, we've broken out of this area, right? On another day, we're looking at how far have we moved. We've only moved like 20 pips. Now remember, we've got about an hour and a half till the cutoff time in where I fade. We've got an hour and a half, and if we move another 20 pips, then maybe I'm looking to fade. But in order to fade that market, I need to see this like pull back in, come up, pull back in. I need some kind of conviction that this isn't validated. Because right now, getting this green, while it could work as a good fade if you manage to pick the top somehow, miraculously pick the top, it could come back in, but it won't come in very far. It won't come in very far because you can see that this has conviction. You can see that we're going to have extra volatility in this market because I know there's been news. I know Jackson Hole is going on and I know there's a lot going on. And then on the Japanese yen, when this opens up, that's not a prediction to the upside, by the way, for the Nikkei. That's just me talking before. When we do open up, we had a very strong close in the futures overnight. When this does open up at 10 a.m., if this moves with conviction, US dollar, Japanese yen, I believe will move with it as well. S&P 500 is doing the same thing. It's just kind of sitting there in the futures. So it's hard to answer you, Bernard, and I know I'm probably being a little bit confusing here. Techniques I like to use are when fading. Let's say this is a fadeable opportunity. Okay. Let's just say we were fading this. I like to have 3 entry points, not martingale. It's very important that you understand it's not martingale. I like to scale into the position. Now, the reason I like to scale into the position because my strategy does not try and pick the top. It kind of does, but I'm happy to get in early. I'm happy to miss out and get in late, right? So when I scale in, I can kind of achieve it all. Now, I know statistically, at least on the US dollar Japanese yen pair, we very rarely move more than 70 to 80 pips in the first 4 hours of the Asian session. It's very, very rare that we actually achieve that type of movement. It does happen, and it has happened statistically, but very rare. So what I'm happy to do based off the statistics there is back myself that the stop loss should be around that 70 pip movement area. So let's say we move 40 pips and we get up to our entry point, which is all the way up here. What I'd be looking then is to, where's my positions? I'll be looking to enter a position early and I'll have this up around here to the 70 or 80 pip mark away. Okay, the 70 to 80 pip mark. So I know like I need this chart to move all the way up here to stop me out. The odds are more in my favor that we're not going to get up there. Then depending on how it's reacting, I risk, let's say, for sake of argument, I'm risking 1% per trade. Okay, that's for sake of argument. I don't risk that much. I don't recommend risking that much. But let's say I'm risking 1% per trade. This first position from this entry point to my stop loss will be worth 0.33% or 33% of 1%. Okay, so I'm risking 1% per trade. So let's just go 1R. Whatever you're risking, my first position is going to be 33% of that R. So my expectation is if we come up, we get in, we come back down, for example. Okay. In the event that that happens, I've only risked 33% of 1R or 0.33R. Okay. Then I'll have a second entry point about 10 pips later, or depending on how the market's moving, with the same stop loss in place and the same take profit in place. And at that point in time, I'll add another 33% of 1R. So as a total risk is now 66%. Okay. So you see how I'm not martingaling, I'm not going in because I still have my set risk parameter, right? That's my stop loss. And no matter what, I'm only going to lose whatever my original R was, whether it's 1R, whether you risk 0.25%, 0.5%, 1%, whatever you risk per trade, I'm still only risking that. I've got the set stop loss. And what I'm doing is I'm breaking up my position so I can scale into it. And what that actually does is when we do manage to come up and we trigger there and we trigger there and we come back down, my risk to reward ratio is a lot better than this first entry because the second entry has an even bigger one. And because the stop loss is a little bit shorter, the position size can be a little bit bigger, even though I'm risking the same amount. And then the third one, this is, don't take this trade, Twana. This isn't a trade, this isn't an opportunity, and this is not what I'm recommending you do. I'm just sharing an example. Okay, so no one go trade this. This is not analysis or anything. This is just simply sharing an example. I am talking about the US dollar Japanese yen right now. And then depending on the market, and it really depends on the market with this last one, Bernard, I'm either adding another position to make a full lot, okay, which is another 33%, which will put me at 99%, but realistically full risk. I'm either adding another position or I'm taking off the first position. Okay, now that is solely based off of perception and feel on the market. If we're getting all the way up to this level and it's doing it quite convictingly, then I am going to look to take it off. I don't want to add more risk into a losing position. I actually want to scale out so we actually minimize our risk a little bit. Then if that goes up and hits our stop loss, we're only going to lose, something around like 45% or whatever it is of the position. That is how I would look to fade the market, but I'd only want to do that when everything is kind of enligning and telling me that you should do that. And that's kind of the art in fading the market, is understanding what it is you're trading and when you should be trading. Understanding the fundamental backing, understanding the volatility, understanding what's going on in the market, and whether or not you are going to actually see added volume or shorted volume. So this is looking like a great little fading opportunity. The only thing I don't like about it is we've only moved 16 pips. Okay, so from naked eye, if I'm looking at this, I'm like, oh yeah, fake out, early morning Asian session, awesome. Let's pull this back in. And it might well and truly pull back in. The only thing I don't like is there was a bit of conviction in the bull move here. Okay, as you can see, green, 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 green. Bit of conviction in there, bit of volume. And then secondly, it's only moved a mere 16 pips. Now remember, on average, we usually move about 40 pips in these early Asian session times. So we're either going to move 40 pips up that way, or we're going to short from here and go down to 40 pips all the way down here. More than likely that we're going to move 40 pips up that way. And then that added volume, that added volatility from the Jackson Hole meetings, from the Japanese CPI coming out in 3 minutes. Don't want to touch it. I don't want to touch it. But I hope that answered maybe some of your questions there, Bernard. I know it's not a strategy that is that I recommend. I do like trading it, and it has brought a lot of profits into my account, but it is very micromanage. Wow, that didn't make sense. It is a very hands-on strategy where you need to micromanage the trade. You have to micromanage the trade. You have to look when to scale in. You have to look when to scale out. It's not like a set and forget ordeal. It's very based on perception. It's very based on feel, and that's the issue. If you're not fully confident in yourself and when you know to scale in, when you know to scale out, when you know you should be trading, when you know you shouldn't be trading, then it's not going to work out for you. You have to be very in tune with the market. And there's been plenty of times that you guys would have seen over the past few weeks where I've joined the live trading room and I've said, guys, I'm just not vibing. I'm just not vibing it. So I'm completely risk off. I'm not trading. I will still paper trade it for you guys to see. But I would say right there, like, no, my decision making is not good. My head is elsewhere. I'm not trading. And a fading technique like that, you have to be switched on. It's not something like you can be like, oh yeah, resistance area, trend line break, we buy. It's not that simple. It's very hands-on. It's very what's going on. Keep an eye on the indices. Keep an eye on the bonds market. Keep an eye on the futures market. Why are we moving? How much strength is in the move? Should I be looking to add a position? Should I be looking to get out of the position? It can be a little bit, which is fun. Don't get me wrong. It's fun to be involved and to be so in it. But it does take a lot of stuff up here, and you have to be in the zone, and you have to also understand what pair you're trading and how it acts and what its average is when it moves. Like how I know off by heart that we move an average of around 41.2 pips. Our really extended ones are about 70 to 80. There has been times we've hit like 120 pips early morning, but usually if we've moved 70 or 80, it's an indicative that we are going to move greater than that, which is why I'm happy to set my stop around there. And then scale into that position, adding risk as it moves against us, as I am looking for a fade. But if it goes too far, too powerfully, and too early, then I'll look to actually take more of that position off, accept that my analysis may be wrong, and look to take risk off in the position. So it's very perceptive. It's not set rules that's easy to follow, but it is something that can generate a lot of profits as long as you understand what you're doing and you're in tune with the market. But it can be very frustrating because there will be times you'll scale out and it ended up being the best trade you ever make. And there will be times you'll scale in and it will just go and hit your stop and you'll lose full risk and it will take you 2, 3, 4 trades to get that back. Interesting. I have similar risk technique, but never removing risk at the level based on the conviction of the move. I like the idea of it. Yeah, I think a lot of people do that, especially in trading. And it's the way most people are taught. I think it's unfortunate because I do think it's actually what costs a lot of people a lot of money, is the idea that they never cut losses. I hate the idea that people don't look to cut losses. Usually, if you look back of all your losing trades, the ones that hit the stop loss, you'll usually see that it's pretty indicative that it is going to hit your stop loss prior to it hitting the stop loss. There is some kind of move or some kind of idea that really shows that, yes, this is going to hit my stop loss. Yet people hold on in hope. Why? Cut the losses, save your profits, go again. Like, you can actually minimize your risk heaps. It's very rare in a fading strategy that I let it hit full stop. When we get close, I look to fade out. In most of my strategies, when we start moving closer to that stop loss, I'm like, okay, well, it's looking less and less likely that it's going to do what I want it to do. I'm going to start looking to fade out of this position. And I think it's very important that people do that. So, yeah, I do think it's worth a look. If you can find a way to add scaling out of your positions or hedging your positions or whatever it might be risk management wise, I definitely recommend investigating it and looking further in because it will improve your whole P&L. The set and forget with stop losses, it can work, don't get me wrong. You can make a lot of money still doing that, but I think you can improve your performance by actually understanding what's going on in your position and looking to get out. You know, if your strategy is to pick the top and you entered here and it's moving up, and your stop loss is up here, most people will just hold on in hope that it will come back down like it is now, right? But if your strategy is to pick the top and it keeps running, then your strategy hasn't worked. Your strategy hasn't worked because you didn't pick the top. It kept running. So at that point in time, you should be looking to scale out. Don't let it go hit your full stop loss. Look to scale out so you can take your risk off. Because at the end of the day, whatever your strategy was, it didn't work. It didn't work in this position. Now, you might get lucky and it come up and then come back down and go hit your take profit, but that doesn't make it a good trade. Your strategy still failed you because you were trying to pick the top and you missed the top. Now, you entered here. The top was up here. End of the day, your strategy still failed. So look to minimize your risk. Great help. Thank you. Been fading pullbacks, but need to apply better risk management. In one now on Euro US dollar. Learning. Thanks for covering this for us. No worries, Bernard. You're fading the Euro US dollar right now. What time frame are we talking? What time frame are we talking where you're fading the Euro US dollar? Japanese yen CPI came in better than expected. What are we looking at? Like 2.6? 2.6, exactly. Yeah, not bad, not bad. So it's not a huge move, but we will see a bit of an increase in the Japanese yen strength, which as you can see it's doing now, pulling back in. Yeah, it looks like it's pumped a little bit of indice market. I'm interested to see how the Nikkei index opens up today because we closed very high. So are we going to continue this bull run? And if we do continue this bull run, I think we can have a look to... I think we can have a look to actually move with the US dollar Japanese yen too. Hi Steve, good to see you mate, welcome. That last pullback back there, 1 hour, 1 minute monitoring. So you're trading the 1 hour chart, but monitoring it on the 1 minute. That's a big difference. That's a big, big difference. Have a peek at VLCN. Let me know what your quick thoughts. No worries. I'll have a look in just a moment. So you're shorting Euro US dollar? Or are you buying Euro US dollar? VLCN. Are you day trading or investing, good sir? Whoa. Whoa, 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 whoa. What goes on here? Early 2022. What did Volcon do? I'm unfamiliar with Volcon. Consumer durables, motor vehicles. Ah, the electric car company? Are they a new electric car company? Yeah, you're shorting the euro. Okay. Yeah, depending on your entry point, because realistically, like the pullback move of this move was here, right? And you can see that that's already come in. So you're looking at the pullback maybe for this move, looking at like the 50% mark, but I'm not sure. Look, overall, look, I'm bearish euro, I'm bullish US dollar. So fundamentally, yeah, I like it. Technically, it's okay. It's okay. But I do like it fundamentally. Investing, they do EV toys. Yeah, look, I can't give any information on what I think about it because I haven't done any analysis on it, right? I don't know their financial reports. I don't know their see if TradingView can give me some information here. Where are we? They're fairly new to the market. Alright, so they're not making money yet, but that's okay. I have found that their balance sheet's gone up through the roof, right? Their assets have gone from 1.85 million to 14 million, but their liabilities are quite high. I have found that any companies that are unprofitable at the moment have been massively stumped with the whole idea of recessions and stuff coming, which is understandable, especially tech companies. Now, I've gone ahead and invested in a few tech companies that have been stumped because they're not profitable yet, because I do believe they will become profitable over the next couple of years, and given that the whole risk-off sentiment's been happening, they are getting in at a cheap price. I'm not recommending you buy this, and I'm not recommending you invest in this because I know nothing about it, Steve. I know nothing about it. But I am fond of the idea of investing in those unprofitable companies just at the moment, solely because all those startups, solely because the whole risk-off sentiment with recessions, the whole risk-off sentiment with everything else is giving us much cheaper prices. They're on discount a lot. But I mean, at the end of the day, it's your investment decision. You'll have to have a read into that. I'm a day trader. I do run a portfolio, but I don't think it'll be anything compared to what some financial analysts out there have. But yeah, maybe. I like the discount on it, but is the discount there because of the risk-off sentiment, or is the discount there because the company is doing bad? That's for you to decide, to have a look into it. You're in it at about $1.80. Okay. I've been away from the charts all week, haven't done anything. Come on, Steven. What's going on? Why not? Sorry, I'm chatting to a couple Stevens. We're over on the Trading View and we're here on the YouTube. There's a couple Stevens going on. Look. What I want to see in terms of volatility, I want to see the Japanese Nikkei index absolutely go when we open up. I want to see some nice bullish moves in the Nikkei. If we see some bullish moves in the Nikkei and some flatlining in the S&P 500, US dollar Japanese yen is going to be banging for an up move. Absolutely banging for an up move. The point, I quite like the idea of it. Remember, I'm expecting a bit of a volatility in today's market, so I'm happy to take these continuation moves more than fading. But I am leaning towards that. I think that could be good. I think that could be on. Say hello to the other Steven for me. Steve SoCal, Steven K Forex. Hello to each other. Good day to the Steves. You've been away from the charts. We just had our 4th child. Wow, congratulations. Congratulations, mate. 4 kids, eh? Well done. I wish you all health, success, and happiness. That's the main thing, right? Healthy and happiness. Success can come after that. Yeah, sure, success can lead to health and happiness, but health and happiness first. Look, everything else, I don't really see. Oh, wow. Wow. You can see, I mean, look, this was the European and US session. It just shows that because the Jackson Hole theory is on right now, the Jackson Hole meetings are on right now, people just don't want to be risk on. They want to see what happens. They want to react to the market. We got a nice bull move here. The Aussie, yeah, look at that correlation there, and that's the beauty. Let's get the Japanese yen, okay, and let's go ahead and change this into a line chart. So this is the Nikkei index. And what we're going to do is we're going to add the S&P 500, and then we're also going to add the Oz 200. Look at the correlation between these. These are all the stock markets. Okay, so we've got the Nikkei, the top 225 stocks in Japan, the Oz 200, the top 200 stocks in Australia, and the S&P 500, the top 500 stocks in the US. Look at the correlation in here. All of them move very, very similarly. Now, some move greater than others, but as a whole, the correlation's quite strong. And now the interesting thing is, let's go ahead and pull up the US dollar Japanese yen. Interesting, right? The correlation all of a sudden gets mixed. Look at that. We've got lines going everywhere. But you can see the blue is the Aussie dollar, right? The Aussie dollar is not involved in this. So let's go ahead and turn off the Aussie dollar, the Oz 200. The Japanese yen index by far is going to be the one we're looking at the most, and that's this dark blue. Look at the correlation between the US dollar, Japanese yen, and the Nikkei. There's a very clear let's turn off the S&P 500. There's a very clear correlation here in the early Asian sessions. You can see we had a bit of a spike up, strong pull down, bit of a pull up, push down, kind of started the flat line, and then S&P 500 European market opens, blah, 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 correlation kind of ends. And this happens quite regularly. We looked yesterday, get rid of that on the side there. You can see early morning, bit of a push up, then a spike down, push up. Okay. US dollar Japanese yen is this one. This is the Nikkei. Strong move to the downside. US dollar Japanese yen is not moving. Oh shit, wake up. Nikkei's moved. Strong move to the downside. This move right there probably been worth about maybe 50 pips. And there was a clear indication that that move was coming prior. And then you can see as the Nikkei moved up, the Japanese yen, US dollar Japanese yen also moved up. So there's a strong correlation between these two things. And the reason I wanted to point that out is because it can give you little incentive into what's going to happen in the markets ahead. And especially in the Asian session, because that's kind of where your volume's coming from. Wow, did not mean to do that. That's kind of where your volume's coming from. When the markets are shut, the futures market's kind of what's driving it. So as we look ahead here, trying to get the Japanese yen index to open up, which happens in 15 minutes, we can look at how we can relay that factor in the Japanese yen against the US dollar. I like doing it against the US dollar, a little bit more volatile, but you can do it against the euro or the Aussie dollar or the CAD or something if you do that. Tell the other Stephen I said hello as well. Stephen Gay Forex. Hi to Stephen SoCal. All I've been doing is watching ICT and studying that info. Fair enough. Whatever floats your boat. Dollar Tree here in the USA has just raised their prices recently, saying 6 months ago today they're lowering the prices again and the stock dropped. Lol. I am sure the 99-cent store will close to follow them. But when the Dollar Tree and 99-cent store are losing business, you have to think that people are tightening the purse strings. Likely. I mean, inflation's up there. Wage growth isn't really following it. Debt's getting pretty crazy. Mortgage rates are going through the roof. Demand for houses are going down. Recession. People don't spend money during a recession. They save money. Especially here in Australia, I want to go buy some lettuce. It's ridiculous. It's like $15 for a lettuce. There's a lot going on. There's a lot. People are going to be tightening their purses. Going to be less spending. I think you can expect that over Christmas. So anyone out there that trades the Christmas earnings, your retail companies, you know, the ones that do really big over Christmas, I think they'll still get positive, but I reckon you could see it maybe slow a little bit more than what the rest of their releases have been. Because I'm not expecting a whole lot of people to go out spending a load of money at Christmas because it's expensive. And everyone needs their money right now. There's recessions coming. And that's globally. That is globally. That's not just US, just UK. UK hit 10.1% inflation. That's globally. That's Australia, that's New Zealand, everywhere. They're all getting a little bit crazy with that. So I think you can see global spending come down, which may give you a bit of incentive into which way to place your bets ahead of earnings. Over those Christmas periods, so when you're looking more in like February time. But yeah, I agree. That's the conditions we're in. I did see multiple brokers over COVID have reported just incredible earnings. I know Multibank, they announced they were doing like $12.1 billion a day in revenue, and they turned a profit of like 180 million US dollars more than what they usually do, which is just remarkable. There's a lot. I think Pepperstone's user base went up like 37% during COVID. Like these online retail brokers and things like that have just done remarkable. Now everyone's been trapped in their home. Things like Netflix and all the other streaming platforms, anything really remote and online. I mean, we saw what Zoom did, right? Zoom blew up. But yeah, different things like that. We are in earnings season, so you're going to start seeing that relay. But yeah, that's my 2 cents on the stock market anyway. But we're talking FX here, FX and indices right now. Does anyone have any questions for me? I know you've been probably sitting there and just listening to me blabber on for the past 45 minutes. But if you do have any questions, don't worry if you're an introvert. It's okay. speak up, and I will do my best to answer them for you, because we won't be live for too much longer. I do have some more stuff to do. So yeah, if you do have any questions, please fire away. Now's your opportunity. Ooh, hello. Pre-market stump on the Nikkei? That's interesting. That's interesting indeed. Keep an eye on that. Looking at the NASDAQ 100 for a short. Do I have the mini futures for that? Maz? That Maz. Let's go. I went with Vantage. I don't want Vantage. I don't like Vantage's servers. Go Pepperstone. Looking for a short on the NASDAQ. What tech stocks are you in long term? I'm in the ASX at the moment. So I don't hold any US companies. I'm holding a couple companies in the ASX, in the Australian Stock Exchange. I'm looking at NASDAQ 100 for a short. What are you looking at fading? You're just fading this top here? Why are you looking for a short here, Tinnis? Run me through it. Are you just shorting because we moved far? I'm curious. I'm curious to hear your analysis. Got a nested 1 and 4 hour supply zone. Okay. I see it. Yeah. I mean, a lot of power in this move, not a lot of power in this move. A pullback to about the 50%. Sure, I can see it. I just drew a pair of eyes, but I can see it unfolding. Not something I'd trade, but I can see it. What's going on in the Japanese? Yeah, no. The Nikkei, going a little crazy pre-market. Anything new about the 5ers you can share? Try and decide whether to get another instant funded or try a bootcamp. I'm not sure if I can share it. In terms of the 5ers accounts, no, nothing new. But we do have something, I don't know if it's been announced yet or not, about equities, and US equity market. Okay, so that's all I'll say, because I don't know if it's been announced or not. I think it was planned to be announced a couple of days ago, but I'm just not sure if it has. But in terms of 5ers and accounts, nothing new. Nothing new. Nothing's going to change. We just have another thing opening for equities and for US stock trading. So if that interests you, then maybe hold off and wait till you get that information. But if you're still looking at trading FX and indices, nothing new. You can go wild whether you want to do instant funded or bootcamp. I prefer instant funded, but that's up to you. Do you follow CENN? I do not. New Zealand EV stock used to be NAKD. I don't. I'll have a look into them. It's just beyond the daily open. I see you trying to fade the Nasdaq, and we'll have to see how it plays out. But this is interesting. What's the correlation doing? I really don't like using Vantage. Global Prime will use you. Correlating a little bit, moving to the upside, this moving to the upside a little bit stronger. If this really runs, actually maybe I prefer if it fades. Maybe if we come to the downside, we could have a great shorting opportunity in the US dollar, Japanese yen. What's the Nasdaq doing? The S&P. Interesting. Interesting. Trying to build some trade ideas here. Got me thinking. Alright, anyway, guys, that is going to do us for today. I know we didn't do very much trading or anything, and apologies for that. But risk off today. I was expecting a bit more volatility. We haven't even had an opportunity in the US dollar Japanese yen because it hasn't moved very much. So at the end of the day, it doesn't matter too much. Fade is working on Euro US dollar. You're fading like the higher time frames. Coming down. Yeah, I get it. I don't like fading higher time frames just because there's more volume. The more time you're in a trade, the more volume in the trade. Whereas like I like fading the first couple hours of the Asian session because most people have just given up. They're not trading. And that's when I come in and be like, yoink, 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 yoink. All right. I hope you all have a fantastic weekend. As always, take some time off the charts. Spend some time with your friends. Spend some time with your family. Come back Sunday or Monday and go again. Honestly, don't just like listen to me say that and say, oh yeah, cool, have a good weekend. Do that. Get away from the charts. Refresh, reset, spend some time with your friends. Be social. Have a big glass of wine. I don't condone any alcohol drink. Disclaimer about drinking. I don't know. Go ahead, have some fun, and then come back, reset next week. I hope you all have a fantastic weekend. I hope you all have a fantastic trading week, and I'll see you on Friday. Thanks, guys. Enjoy.